Joining us now to discuss markets is Truflation founder Stefan Rust. Welcome, Stefan.
Thanks. Glad to be here.
Good to have you. So, when is the Bitcoin market going to make up its mind if it wants to be over $30,000 or not?
Well, I think we've broken through $30,000. I think we're going to hit $50,000 by the summer. So I think the hodlers, as you just mentioned, are all here holding on. They got diamond hands. We're seeing a flight. I think Asia is really entering in with a lot of liquidity into the Bitcoin market. You're seeing China with quantitative easing, Hong Kong opening up. Where is that liquidity going? They're going to go into Bitcoin or Ethereum, and they both doubled since the beginning of the year. Not quite, but close to. So a really good sign of where the market is trending. We've been in crypto land, we've been going through a bear market for over a year. And so people are hopeful to see this pick up and get stronger.
Right, that makes sense. So we've had systemic inflation for quite some time now. The Fed raised rates for the first time in a while about a year ago, and Bitcoin didn't really react positively until that systemic inflation led to rate raises, which then led to bank failures and uncertainty. Do you think that this invalidates the Bitcoin as an inflation hedge narrative, or is it just another feather in the cap?
No, I think it's an inflation hedge. It's not necessarily an inflation hedge. It's a store of value. I see Bitcoin as the gold 2.0, right? It's where you hold your money. Nobody wants to spend their Bitcoin. Everybody wants to hold on to it. So I've got my Bitcoin. You don't want to be that person that spent 10,000 Bitcoins buying a pizza. So I don't think the market is looking for that. They're looking for other assets to use for utility payments, for governance participation, for fee participation, or even just day-to-day transactions and rewards across the board. So Bitcoin is going to be that store of value and has proven to be so. And I think we'll break through the all-time highs in the 60K in not too distant future. And the looming fiat challenges that a lot of the banks are having, the debt ceilings, all of those are showing and finding an alternative asset deposit and store of value in Bitcoin, and not necessarily in keeping it in your Silicon Valley bank anymore. You can keep it, or your First Republic bank account, you can be keeping it in Bitcoin, either in a ledger or some custodian.
Right. So you seem relatively bullish, Stefan, maybe even more bullish than I usually am. And we've heard lofty price predictions for this year. Is, the $1 million Bitcoin out of the question for this year, or is that just complete nonsense?
I mean, no. I mean, when inflation, if you look at the justification and the metrics that Balaji has pulled together, fundamentally, it makes a lot of sense. And hyperinflation doesn't happen slowly and gradually. It comes and picks up gradually, and then it balloons moons the way he highlights it. And, it's definitely still a possibility. Balaji is an investor in Truflation as well. So we definitely sort of drink the same Kool-Aid, so might be slightly biased here. But, if you look at all of his tweet threads and the material that he's aggregated and the insights, it makes a lot of sense logically. I think sentimentally, we are not yet prepared for such a thought concept. And I think as a result, either mentally we block it from our minds, or we just don't want to see this happen. But everything that the governments are doing in terms of printing money, creating staking pools themselves, fighting any kind of innovation is not furthering the cause of trying to embrace and build growth to fund tax income to then pay for some of the debt that's been created and create new jobs,
Right. You mentioned Asia a little bit at the beginning when you were introduced. And can you touch on that a little bit more? So Bitcoin discourse is typically between Americans, and how important is Asia really when it comes to Bitcoin's price performance from a liquidity perspective, from a market, dynamics perspective? Just what are you seeing there?
Well, I mean, look at the markets. If you look at the trading volume over the last couple of weeks, a large portion of the trading volume has come from Asian exchanges, Asian markets, where they can trade, they can participate, and ultimately that's providing new injection into a lot of this market. And I think that's an importance. Look at Binance alone; it's generating over 10% of Bitcoin trading volume, countered with USDT. So Tether is the counterpair to do that. Tether, I think over the weekend it was hitting $80 billion in daily trading volume, right? And so it's just showing that offshore markets where these coins are very dominant, that there is a lot of desire to find a new currency and to generate and be able to create new wealth. Wealth in real estate is tied up in existing institutions. Where does the youth tomorrow generate wealth? How do they grow their generational wealth that was generated in the past with Rockefellers and the railroads and real estate, right? And how do these new generations enter into this market? Bitcoin, cryptocurrencies, Ethereum, Solana, Matic are all good projects that are really building significant value and have a lot of activity on their chains.
Right. Stefan, where do you think inflation goes from here? Are we going to see it keep coming down, or do you think that we are doomed for hyperinflation in the US?
I don't know about hyperinflation, but we definitely see inflation picking up again, right? We're seeing oil go up in price. We track it daily. We monitor 18 million items. We have 3 price feeds per item, and we're seeing it break up again from a low of 3.8 all the way up to now we're about 4.3%. So it's slowly turning around. We think that with a lot of the regulatory changes that's happened, with the onshoring, with the cost of capital moving upwards, that actually inflation is going to continue to stay around 5-6%. I think that is going to be the benchmark, which is not bad as long as it's consistent and stable, and we're actually improving our infrastructure to actually facilitate greater trade, greater interaction, and greater operations with better equipment to increase productivity. And that's what the outcome needs to be. And if we need to do that with 5-6% inflation, that's okay, because we can predict with that and we can work with a consistent number versus a constantly fluctuating number.
Understood, Stefan. Thank you for joining us. That's all the time we have for you today.
Thank you. Thanks for having me.
That was Truflation founder Stefan Rust.